Crypto dads, here's the question. Why are there so many crypto token launches failing right now? And, with great tech and even with some huge backing. Today, we're talking with Paul Mack from BIGA Games, who pulled the brakes on his token launch, not because he wasn't ready, but because there's some evil lurking in the systems. And most importantly, the markets are just shite at the moment.
Yep, we're diving into the dark side of launching in a bear market, shady launchpad tactics, and what needs to change in this industry. If you're thinking of launching a project, you need to hear this.
Paul, welcome back. It's been a few months since we last chatted. Give us a brief update on BIGA since the last time we spoke, and what are some of the milestones BIGA has achieved since we last chatted?
Hey guys, thanks for having me. It's really good to be back, actually. Always good laughs with you guys.
Great to have you.
As you said, the market has been shite. So a lot of it's obviously just navigating all that. Because we delayed launch, and I know as token investors, everyone's sort of really anticipating that major phase. We've actually just been working on best ways to ensure that we can find some kind of consistent formula that would work in launching a token in this bear market while pushing further and further down our roadmap, which is exactly what we've been doing the last few months. As you guys know, we have a growth model where we wanted to come to market with really simple ABC games, very easy, light, push them out, see what works, what doesn't, pull them out. And then we wanted to scale up the quality of our games. So a lot of our dev team has been isolated towards expanding the type and quality and magnitude of the games that we're actually launching. So they've been sort of knee deep on one of our MMOs. That's been the primary side of the development side, and just preparing the actual arcade itself for full deployment, token aside, but actual full commercial deployment. So yeah, that's the main focus of BIGA recently.
Yeah, cool. Did you get the mobile running as well? I think last time you guys were working on the mobile version, or?
Yeah, absolutely. So we've got 3 of the games already loaded on mobile, ready to go. We deployed on Telegram. We're looking at alternative options. I don't want to go into too much depth about Telegram, but just most of the user base we found was just really non-existent. It kind of feels like dead internet theory.
Right. Yeah. Well, I'll tell you what, why don't we talk a little bit about the pause that has happened here. So, you've mentioned the fact that you've kind of had to pause the launch, and obviously it's not for lack of progress, but what you found out behind the scenes that you had to navigate carefully to protect your project and your investors.
Yeah, okay, so I guess taking it back, for starters, I don't want to go out and blame other people. This was a tactical decision on my behalf as well. So it's really important, but I want people to understand the thesis, right? For starters, everyone knows that our product's been live in the public domain for a long, long time. We've been testing, making sure everything works. We had product ready to go long before we took on any investment capital. So I self-funded everything to date. And then it wasn't until we had a working product open in the public domain that we started taking on third-party capital. But once that transition happens, I think people sort of sometimes misunderstand from a founder's perspective, you're essentially a steward of other people's money. And I think that's really important fundamentally, not just your job's not just to grow it and provide them a return. Your job's to protect their capital. And these kind of market conditions, I think any founder sort of rushing to market against this just absolute plethora of reasons why you shouldn't, mostly because of the type of liquidity and the type of post-TGE performance you can expect from tokens based on all the data that's readily available for everyone. It's basically commercial suicide for all the investors that invest in your project. Most projects, and I'm not talking like just a fraction, but sort of, I think our last stat was somewhere around the 90 to 98% of all TGEs are down within 7 days of launching. So that's really important. So the founders who have just held on to their investors' capital have outperformed 95% of the market. Really simple, right? And I think that's really important because while fundamentals are really important, this is a price-sensitive market, right? If your token launches and it's gone to shit, you're just not going to have that sort of fat protocol velocity where people become attracted to your product because they've seen how well your token performs. They become curious, they invest, more confidence, more developers want to get involved, more partners want to get involved, more investors want to get involved. So like treating your token like a sort of public optics marketing campaign is fundamentally important. So getting that right for optics as well as for your investors is really, really important.
Absolutely.
Paul, you met with, plus minus 30 launch pads. Why did you take a step back from most of them? And what did you find out behind the scenes that, it seemed a little bit shady?
So I want to preface this with Launchpads are selling a product. To sell a product, they need buyers willing to buy that product. So it's not necessarily their fault, right? So you can't really force them to sell your project if they're not ready and they don't have willing buyers. However, when we first were going to go live, we were backed by a top T1 Launchpad, one of the best. We had a contract in place. They asked us specifically to cut everyone else. They wanted the whole raise, very excited. And then we had our first sort of downturn in the market. There was some politics in the back end that happened between them and some of the market makers. There was some legal issues, and that sort of halted everything. So we were quite dependent on that because we had sort of said no to everyone else. So that put us on the back foot. I didn't want to be in a position where we were heavily dependent on a single venue again. So I started since then, this is months ago, like 4 or 5 months ago, 6 months ago. Since then, I've been doing due diligence on as many launch pads as possible. Originally, it was just to set up a good launch profile to make sure we had a good footprint across the whole market to get exposure to as many of these launchpad communities as possible. But the more meetings I had, the more I realized there was this sort of frequency of terms and terminology and clauses that were quite predatory in the contracts of all of these launch pads. And the more I dug in, the more I noticed a pattern that was very suspicious. And this became more and more revealing as the market got worse and worse.
Sounds like you've seen that shady stuff doing your due diligence on these launch pads. So can you walk us through some of maybe those worst red flags that you were seeing, and kind of what do builders out there really need to be wary of?
Okay, so fundamentally speaking, launch pads are only successful, right, if they have buyers.
Mm-hmm.
So those buyers are buying a product that's going to go up in value. If it doesn't go up in value, how many times do projects need to fail on that particular launch pad before their audience stops buying new launches?
Mm-hmm.
I mean, you start there and sort of work your way back. And if you look at the stats sort of since, I think most of our DD recently has been based on trying to find a formula that works for launching via launch pads in this market, 2025, right? So from January onwards, we've been trying to find the right formula. And if you look, majority of launches, I mean, 95% have failed, as in they have failed not just to generate a profit, but to maintain IDO price within like a week of launching. Most of them, which is really scary, is within 48 hours. And that's a really interesting figure. So what I'm saying is, let's say a Launchpad raises $1 million. The price goes up 20, 30, 40%. Maybe it does a 3x, but within 48 hours, it dumps below that $1 million threshold. It dumps below that price point that all the IDO buyers bought in, which is really bizarre. And this is it's really bizarre because you think, okay, they should be creating the price floor and price trajectory should be going up. But if that happens over and over again, you think, what's the word?
Something there.
Nihilist? Like these people just like hurting themselves and losing money over and over again? No, they don't, right? Because honestly, most of the IDO participants aren't even there. And this is where we start going back to the contracts and looking at sort of the terms and conditions and aligning with how the performance of Launchpad is post TGE. So most Launchpads, and again, I've on prefaces, there are definitely some good ones. I have a list, like it's a handful of them. They're really honest, and you can see they have the right sort of terms. But with most Launchpads, and sorry, this is a long way to get here, but they have this clause, right? Hey guys, we're going to guarantee a raise. You're going to pay 10% commission upfront because we can guarantee it. So that's already a red flag. Like, how do you guarantee a raise from a distributed audience, right? You don't know how much they're going to put in, but they do because they're actually buying the raise through their own distributed wallets. So they'll buy the raise and then they have this 48-hour refund period. And it's pretty simple. Look, if price goes below the IDO price within 48 hours, then we full refund. You don't get any of the capital that we've raised, which is really interesting. Okay.
Yeah.
So
Wow.
so what they do is they buy the entire raise themselves, right? They pump the price, it gets like a 3x, and they dump it before that 48-hour window. Now they don't have to give the project any of the funds that they raised.
Oh, wow.
So the project has now, their tokens been dumped, right? It's below IDO price, usually below private sale price as well. Everyone's down, it's miserable. They have no liquidity because they got no capital from the actual Launchpad, right? And they're kind of just dead from then on out. The Launchpad, however, if you look at the other side, they got the upfront fees. So it ranges from sort of $3,000 to like $200,000, depending on how much the Launchpad's promising to raise. They got free KOL tokens. They got free marketing tokens. They were all unlocked, and they get to dump all of those. So they got all of that for nothing. Plus, what else do they have? They now have the optics that, yeah, we had a 4x. So if you go to all the listing sites that sort of show the performance of Launchpad, you see, oh, these guys had a 4x right after launch. Hey, it didn't last long because that's the market. But really, they've now positioned themselves as, hey guys, come launch with us. We're going to raise a ton of money, which you'll get which you'll definitely get, because, and then you'll get price check of 2 to 3, 4, 5x afterwards. So all projects just keep coming to them saying, oh, great. They're still successful in this downturn, but they don't look at the details. And once you look at the nuance of it, of the deal and the way it's all structured, you realize pretty quickly that most of these launch pads are out to get you.
Yeah, I'd say that's some really shady shit right there. That's crazy.
More importantly, Ryan, Paul said 48 hours. So what happens if we buy and sell within 24
you're thinking
hours?
You're thinking of joining in with these.
No. I might have a friend that trades.
God, no.
Thanks for the inside scoop there, Paul. Win Lambo, Ryan. Win Lambo.
Exactly.
But they've just got this. That's just a money printing enterprise. Yeah. They have no risk. There is nothing for them to lose. They use their own capital. They don't spend $1 of it elsewhere, and they just get to dump all these free tokens they get up front. Some of them even have clauses where they get to keep a portion of your tokens for like 6 months before giving them back to you. The tokens you gave them for the public sale. This is crazy. This is the state of the space, and it's just disgusting, man, because especially someone that loves crypto, generally speaking, and you sort of see all these sort of waves of scams coming through, and then they get revealed, then they go away, and you think, okay, we've got rid of another one. Process of elimination until finally the space is going to be pure and clean. But the scammers just come up with some new fucking thing every time. So yeah, it's bad out there.
That's absolutely crazy. But why do you think that, are projects just desperate to just get anybody to list their project, or, because if the terms, or they're just naive to think that they're on their side? What do you think it is?
Okay, there's a lot of reasons, right? Everyone's in different boats. Like I said before, you're, as a founder and as a team, right, you're stewards of people capital. So like I said, any founder rushing to market in this environment, it's a red flag. You have to start asking questions. Like, one, is it negligence? Are they insolvent? Because rushing to market like this, knowing your token's going to dump, what's the point? Are they desperate, or are they committing fraud? And honestly, those are really majority of the answers to that question. The only okay answer right now is naivety and optimism, which like are forgivable traits. A lot of entrepreneurs are like that. They love their project so much they think no matter what, we're going to kill it, whatever. But that naivety and optimism is a very, very, very fine line right next door to incompetence, right? And you got to ask yourself then, like, do I want my capital sitting with the guy that makes these decisions?
Yeah.
You know what I mean? So it's just you got to really ask questions like, who's launching in this environment? The only project that should be launching should have enough capital for them to fundamentally maintain whatever price they launch at. They're completely market resistant because they just have a ridiculous treasury and can maintain, I don't know, a decent return on investment for all their private investors.
Yeah, I could see that if you've got a massive treasury, or if you've got you know, if you have a real world product that's bringing in real world money to be able to support your token, right? I think that kind of makes sense. But yeah, I think if you're basing it on speculation in this market, you've got a major problem, I think.
Absolutely. And you have to fundamentally understand Launchpad participants as well. They're different. They used to be guys like couldn't wait to get into the latest project, like 2017 peak ICO. It was just, you just could not get allocation. It was so hard. That same thing happened in 2021, right? It was really, really hard to get in. Because everyone was like, geez, these are going to crank. It was just a total confidence game. Now it's the total opposite. So you really need to take that into account.
Yeah,
you got to understand that. Sorry, I'll go back to that. You got to understand for starters, we're already in a risk averse market. Capital isn't like looking to sit there and grow right now. Capital is looking to get in, get out, and take some profits as much as they can. Very skittish market. But generally speaking, Launchpad participants are a different beast now. They're not the optimists that want to be like, can't wait to get in this project because they're guaranteed they're going to get this long-term 10x and just get supremely wealthy. What they're doing right now is that they expect a certain amount of tokens unlocked on day one, right? And they expect that the project will do like a 4x. So if they do a 4x and they get 25% of their tokens up front, guess what? They've broken even straight away. The rest of their capital can fly. It's a risk-free investment. That's what most are looking to do now.
Wow. Yeah,
so if you understand that, you need to know that you have to have enough capital to offset that initial sell pressure alongside any early unlocks you have for private investors. Make sure you can handle all that to then grow. Yeah,
absolutely. So what, like you're talking about the terms of these kind of predatory launch pads. What if I'm out there and I want to launch a project, what terms should I be looking for? Like how are you differentiating the good from the bad in a launch pad?
Terms and behaviors obviously really telling now, because all we have to do is reverse engineer everything I was talking about, right? If you just look at their previous launches, if all of their tokens are dumping below IDO price within 48 hours, you know pretty much that they don't have a real audience of buyers, because I don't know, people, you know, some what is it, sadism, where they like to hurt themselves. most people don't have the financial backing to be able to do that over and over again, right? So people aren't just buying Launchpad after launch after launch, TGE after TGE to lose capital. If that's happening more than 2 or 3 times, but they're still raising all this money from the same audience, you know right away that they don't have an audience. Second is look at the launch pads that are hyper selective in this market, because that's exactly what all investors are. That's exactly what all, like, you know, legitimate business should be, is that they become hyper selective. So have they stopped doing, have they reduced the frequency of their launches, and what kind of projects are they launching? That's fundamentally important. Like we've been working with Paid, and they haven't launched anything for a long time. It's because they really care about their investors, right? If you have legitimate investors, you want to make sure they get a return. That's really simple. If Launchpad investors aren't getting a return, then your Launchpad's redundant. You're going to lose them. They want to keep their customer base. They want to make sure their Launchpad participants get a return. Simple as that. I think that's the first base. From there, you can sort of abstract out everything else quite simply.
That makes a lot of sense.
All right, and just to shed some light, so my good old best buddy, not you, Ryan, my other best buddy, Super Grok, helped me coagulate some information, and how's this for a stat? So in the last 120 days, December till April, right, only 10% of IDOs, so there was 50 projects that basically launched during that period, more or less, only 10% of those held their price after launch, and the average price drop was over 70%. How crazy is that?
Okay.
So 5 projects was above. Yeah,
and that's
go for it.
From the IDO price.
Yeah.
Wow.
That's from IDO, right? So that means the founders that protected the capital have already saved their investors 70% drawdown, right? Which is really impressive. But with that stat, can you ask Grok how much of those projects that are in profit, how much liquidity there was following it? If they have no liquidity, but they managed to maintain the price, then you know they're artificially holding up their price. They haven't
But
actually.
this is the drop, The drop, so minus 70%.
Yeah, right.
Yeah. I'm talking about the successful projects.
He's saying that little 10% that actually was successful, were they really successful or not?
True,
exactly.
True. Yeah. And it was only 5. So, and then of course, you know, when we do a comparative analysis, because I said, Grok, we can classify this still as a bear market because it's so shite. So we said bear versus bull, all right, and it compared it against 2021, right? So whereas 80% of launches went up by an average of 300%. There was 300% gains. That was 80 out of 100 projects that were launched. You made some serious money. How crazy is that compared to now? And the question is, when you know that stat, you are mad. You're absolutely mad to want to launch right now. So it's crazy. So it's crazy.
Yeah,
so Launchpads, are you launching projects? We know what you're up to. We've got our eyes on you.
I mean, that shift is absolutely massive. It's, that's not bad luck. That is a absolute broken system that seems to be punishing builders and their investors. So
no, it's really starting to raise questions. Are we seeing a fundamental shift in go-to-market strategies? Because if you look at other, some projects that have even gone via Launchpad and then major centralized exchange, look at how well they performed afterwards. Most of them are consistent with that same drawdown, right? So are we seeing a transition from the traditional Launchpad 6 into on-chain only, more fair launch? Are we going to see a hybrid of that moving forward? What's the successful formula? Or is it purely just waiting on the next liquidity rush?
Right. I kind of have a feeling it's the latter there, but who knows?
It's definitely liquidity rush, but being involved and not involved, but being a part of understanding, how the markets have changed over the years. It's interesting to see how projects have changed their tokenomics. This last little, from mid last year to the end of this year, mid last year to the end of last year, it was this like, okay, now we're going to give total token unlock, right? Which means everything's out, whatever the price does, then they can basically, then a couple of projects did that and it didn't work too well. Then they said, okay, whoa, let's go maybe 20%. So there seems to be a new wave of trying to understand what's the best way of doing tokenomics, and it's a science. And they've all they've all said they got the best tokenomics, but besides liquidity, we can see now that they're struggling.
Absolutely. It doesn't matter the structure of anything if there's no relative demand. It's simple as that, right? Without demand, nothing's going to work because there's no end buyer. So if you need to generate demand first, which is why revenue-oriented projects are going to be so fundamentally important, which is why BIGA, for instance, we're pivoting from just doing a token launch to now looking to just get our product live so we can start churning in revenues, because then based on our token model, right, our arcade becomes a net buyer of any available tokens as it needs them to function its arcade system. So revenues fundamentally key, and they should always be the pure signal. But I mean, that's just a reflection of the nascency of our industry. People say that we're really late stage, but there's nothing in our industry that signals that we are at late stage maturation at all. I mean, God, no. You look at every company in the world has revenues. Only about 300 out of 3 million tokens in crypto have revenues. Right. The fact that all these scams still exist, the fact that Launchpads and stuff can get away with this without the market even noticing, just tells you exactly how nascent this industry is.
Yeah, it's absolutely crazy. And I think you're 100% right. I think the launches that are going to be successful going forward, I think are going to be based on a real revenue structure rather than, just speculation.
Well, yeah, market resilience is really important, right? So you have to ask yourself, and it's why we're seeing so many game studios close up shop, because without a revenue stream, you don't have anything to support operating expenditures like any normal business. It's just so weird that crypto never looks at it that way. Like, guys, if they don't have revenues, how are they paying their bills? The only way they're paying their bills is dumping tokens on you. You're buying their bills.
Yep. It's
all that money from pre-sale.
It's absolutely crazy that we've survived this long in that type of a market. But well, like you said, it's changing
and
for
Ryan,
sure.
Ryan had his 22nd birthday yesterday.
Yeah. I've lived a very hard life in crypto.
You're the hide the pain Harold of 2025.
Right. So all right, so we're talking about kind of launching in this crappy market where there is no liquidity. So Paul, what kind of a psychological impact does that have on founders and on their communities? Can you give us a little insight there?
Yeah, obviously it creates a little bit of tension between the founders and the communities. When I'm talking communities, I'm talking about purely investors, right?
Mm-hmm.
They, unfortunately, crypto, we don't, mentally speaking, we don't operate on the same cycles as traditional investors. Like when I take a position, I'm usually a 5 to 10 year horizon.
Mm-hmm.
In crypto, they want it all now. And emotional investment leads everything else in this space, right? So they don't see the nuance behind everything. They don't see you trying to protect their capital. They just see you as holding out because something's wrong. But it's the complete opposite, right? If your founder's going live now, launching their token, there's probably something wrong. You should really look into that. Founders that are resilient, that can afford to wait, they're the guys that you should be, backing. Okay, these guys are making prudent decisions and they have the capital to sit back. They don't need to dump their token quickly because they don't need to liquefy their business. So that's really important. Mentally speaking, from a founder's perspective, I mean, it's a conviction game. You didn't start this 5 years ago and start building with your own capital and spend years and years, throw your reputation on the line because you'll be worried about, short-term market dips. It's just non-existent, man. All I see is the end goal. So I'm absolutely fine, and it's just really managing. I'll tell you one thing from a founder's perspective: your team, even though you pay their salaries, they take their salaries and invest in crypto as well because they're just as bullish as you are. Right. So you got to look after them too because they're going through it as well. Right. So that's something that people don't really know. But yeah, no, it's really just managing everyone's expectations. And I know that you've kind of kicked that in the gutter because you originally said, hey guys, we're going to go live soon, invest in us if you want to be part of our launch. And then when you didn't, you've essentially defaulted on that social contract you guys had or that legit contract you guys had. So it's really just about maintaining trust, which is why I'm if you look at the frequency of my videos, for instance, I'm being more and more public about everything, and I'm sharing the reasons why I'm not doing everything why I am. We're also building in the open, so everyone can see that we still have a team and that we haven't just parked everything because we've got no capital waiting for a token launch. Just want everyone to see that we're doing that. Secondly, just to sort of update everyone on BIGA, we're actually looking at launching products. So we're not reliant on TGE. The problem is that when you actually integrate your token properly in your system to launch without the token, you have to pull it apart again. So we had to go through that. We've just finished our penetration tests as well. So that's ready to go. So on the product side, we'll be looking to launch sometime soon and just hit revenues. So again, back to the mental, we're completely composed, or at least I am. I know some of my team, they're a little bit worried. But that's part of the game, and it's only going to make them stronger in the long run.
Absolutely. No, I mean, that's the right attitude to have. Get your product working, let the revenues flow, and then hopefully the token will follow eventually, right?
Yeah, absolutely. It's also not, for me personally, I don't know if this helps anyone, but like I said, I'm more of a macro guy. I have a long-term horizon. I think my kids will enjoy the benefits of all my efforts today, not me. Plus, I live really cheap, so I don't really need money. I'm happy just watching a movie, eating a lot of good food, and occasionally going for a surf or playing. That's me. I'm happy, really happy that way. But when I look at it from a macro perspective, I see this is all just, again, a very nascent market. I'm very excited about stablecoins front and center. Why? Because I think stablecoins are going to be a huge, huge vacuum of retail capital, mainly because it sort of coincides with the fiat fastest horse theory, where all the countries that are suffering total debasement will have an easy port into USD, which they'll use as their savings vehicle to offset local inflation issues. But that means they're all plugged into crypto. Once they're all plugged into crypto, even if it's just stable coins, it's easy one-step process into any other crypto protocol as well. And I think that those are important stepping stones for mass tokenization. So this is my long-term thesis. I think every single small private company in the world is going to eventually have their own mini IPO through tokenization. I think it makes sense. That's when all revenues come on chain, right? And that all requires having that infrastructure where everyone's accepting holding stable coins. So when I have that in mind, and I look at sort of the small period of time we're in right now, plus if you've been in the space since 2017, you've been through I remember like the China banning Bitcoin was probably one of the worst periods of my life, because I was like really all in, and I thought that was the end. Like, oh shit, country's gonna ban it, it's all over. So once you've been for a few of those, and you have sort of a long-term outlook that you're very comfortable with, I think it's just exciting about where it's going. Not to mention AI is a very exciting segment for us. I don't know if you guys want to hear, but like 2020, I made my first proper big gaming investment. And about 2 years later, they hit me up for more capital. So they'd completely burned through their treasury, and we were like, no, but let's look at your billables. So I found out they'd spent about $1 million on these 3D in-game assets. I mean, sure, they were pretty, but Jesus, what a total waste of capital. And shortly after, Mid-Journey came out. So everyone was punching out those static prompts, and we realized really quickly that this was such an eloquent solution to my $1 million problem. And this at scale is going to be huge. And I think that since then we've been experimenting with AI, especially in BIGA Arcade, looking at how, initially we were thinking about doubling our team size. Now we're thinking about contracting because of how much optimization gains we're making from using new software. And it's just, the improvement rate of it is exponential. Like what we had 2 months ago is nothing compared to what we have now. So all of that means lighter, leaner companies, which means lower FTVs because they don't need so much capital to operate, right? And all of that is going to make it easier for crypto projects to go live with a very light and lean FTV model, very light and lean operating overheads, but they still have the exact same potential upside. So all of that's going to be really, really exciting for crypto moving forward over the next few years, I think.
Yeah, absolutely. I think you hit the nail on the head there with AI and stablecoins. I think both are going to be a massive boom for our industry here.
Absolutely.
So Paul, you mentioned that you're kind of decoupling the token a little bit just to get launched here, right? Can you, number one, kind of explain like exactly why, why that makes sense? And then also, what's the time frame then of getting the arcade launched without the token?
Yeah, absolutely. So if you want to go the Launchpad route or centralized exchanges, you can't have the token trading before your big sale, right? Obviously. Okay. So for our arcade to function, it needs the token as well, and that's the problem with having a properly integrated token in your network. So if we want to launch the product, we have to remove the way the token's woven in, so it just operates freely, and we can generate revenues and then do the token launch later, then reintegrate it, right? That's kind of the plan here. Okay. As far as how long it takes, we've just finished penetration tests. We've now got it operating off sort of a dummy token system. We need to do a new audit because we've done all that. Audits usually take 2 weeks, provided there's no issues. Then we should be ready to go within the month, just to get just to get the platform going live. We're gonna launch with one game first. We're going to have low to high stakes. We'll concentrate on getting revenues in, showing off our model, proving, because we've already got sort of proof of concept done. Now we want to prove revenues, right? And if we prove revenues, then we've proven our token flywheel too. So then the token launch should be fantastic after that, because we have a straightforward, non-linear buy and burn model that could accelerate token price. So that's the plan.
Yeah,
and like I said, revenues are just important in this environment. It has to happen.
Yeah, and then mass adoption.
Amen. Amen. I want it all. And that's something that's really exciting for me, to be honest. Look, I don't want to shit on all the other projects, but look, this is the state of competition and, capitalist program, and they're all dying because they've essentially failed to either raise capital or produce a sufficient product. And the less of them there are, the more of the Web3 gaming hype we get to consolidate into our project. So I'm really excited about that, to be frank. Sorry to all the projects that are failing, but this is the way it is. And honestly, I want it all. I think we've been talking about this for years, that every single project, if you go back to my oldest videos, you'll see that I spoke exactly about what's going to happen, and it just all played out. Not to pretend I'm some Rasputin prophet, but I'm an idiot. I'm not like these gigabrains in crypto, but the fact that I could just read all of their white papers and see, okay, these are all fundamentally flawed. The economic designs are all going to fail. Like very, very obviously, all these token launches were going to fail. And 2 years later, it's all happened. And you see every single Web3 gaming KO, single studio, all starting to talk about now what we need to do. But they're all still beating around the bush because no one wants to commit to the economics that need to be present in these kind of models. If you don't have the underlying economics, none of these games are going to work. It's just as simple as that from a token perspective. And now it's all played out. And now we essentially, what BIGA is essentially the antithesis to all the failures, because we built it with all of these models in mind. We built it. So I'm really excited about that. It's positioning us to really capture it all. So yeah.
Absolutely. That's super exciting.
I'm very, very excited to watch this model in action. It's we've been listening to it for some time now, and you know what it is. I don't think anything in life is perfect, but if it's near perfect, it's good enough, you know. And it's kind of like watching this layer. We can use the onion example. Watching these layers and like basically peel off, and it's exciting because I think this is a pivotal moment. I think in crypto that could change how everything is done in crypto. So that's why I think it's that's why I'm excited to see it unravel, because this could be that point.
Yeah, me too. And like, I'm optimistic. I curb my arrogance. I think I've nailed it, but like, there's that line in Oppenheimer, the movie, where he goes, "Theory will only take you so far." And while we've tested it in the public domain, we haven't tested it with real capital yet. So we don't know how everything's going to act in and how much capital is going to pour in, right? So yeah, I'm eagerly anticipating this. I can't wait to see it play out. Absolutely. God, I hope I'm right. If I have, it's just going to be huge, man. It'll be like a vacuum, honestly.
Yeah, absolutely. That's what we're all hoping for.
Yeah.
And Paul, tell me, speaking of capital, a question. So you've self-funded the project. Yes, you've taken on investors, but let's just say things in the real world, as in like with crypto's our world, but in the real world, like the stock markets and that, it still goes haywire for the next 8 months to a year. How big are the coffers, and how much time do you still have? How much capital do you still have to pay your staff and keep the project afloat?
Yeah, so 12 months ago, I put in 24 months roadmap. So I've got another 12 months based on what I've budgeted. As you guys know, I've self-funded everything from the start. We took on a small amount of capital from other communities. But yeah, no, we're totally liquid. I'm fine personally. Most of the capital I put in the company comes from my own investments. So worst case scenario, honestly, I'll start feeling the pinch in 24 months if we're still not live and still not generating any revenues. I'll definitely be concerned there. But that's just something that I'd be very honest with about up front. I've got too much of my reputation, and also I have, because it's self-funded from me to some degree, I got to be concerned about my own welfare and family's welfare too. And that's just being honest as a human being. So I'm not going to like destroy myself and my kids, welfare to like just keep up a facade. So yeah, 24 months. How about we check back in 12 months if we're still not live? You guys can put a gun to my head and really kick my ass. But that's just not going to happen. We're going straight for revenues in the next month, right? So we get to prove if this works or it doesn't. If it doesn't work, so be it. But Paul, I think we've got it.
After 8 months, Ryan and I are going to take a little trip to steal your surfboard, teach you a lesson, hold it ransom, take it to an island and call it Wilson.
I don't think it's going to come to that. I have faith. This is gonna be big, and it's gonna be big soon.
Yeah, no, I'm super excited.
So. Are you guys going to play when we go live?
Absolutely.
Yeah. Good. Okay, I'm gonna hold. That's one thing I'm going to do as founder. I'm going to really lean on everyone. Look, if you're invested, I want you to play it, put some money in, and just give it a try. Yeah. See if you get. I really want to see that. I mean, that's the main thing you want from your backers, right? Is just they become active participants. Like chuck in $1, $10, just play it, try capture a level and see how you do on the revenue side.
Yeah, we want to play. We want to get the whole audience to play too. So hopefully we'll have some tournaments or something, some gone crypto tournaments or something on there. It'd be fun.
Additionally, guys, for some good news, and if you we received a grant proposal from Scale. We've spoken to other Launchpads, other chains that are interested in working with us. So we're a multi-chain play. So yeah, we're definitely expanding the footprint of our coming launch. Essentially, it's going to be bigger and bigger. We have a bunch of KOLs that have been lined up. We paid most of them in advance already, and they just haven't done anything yet because we wanted to use them pre-TGE and post-TGE. But when we go live with the product, we're going to just use them for that and really just go all in on product launch.
Did you just say bigger and bigger?
He did.
I like your play on.
Yeah.
You've
That's awesome.
indoctrinated the words into your own language. It's beautiful.
The other thing is like transparency and honesty. Like I welcome anyone to come challenge us, come talk to us. If you have a problem, just raise it. Like we're like fully transparent here. In our products live, you get to play it yourself and see everything that's going on. You guys, I think you guys have VIP accounts as well, so you can see the back-end analytics of how everything's going. Have you tried that yet?
I've been dabbling a little bit with it.
Cool.
Yeah, definitely. So yeah, that's super exciting. But I'll tell you, why don't we let's do something a little bit for all the builders out there, and just based on everything that we've talked about, let's share 5 quick things that every founder should look out for in this bear market and these predatory launch pads, right? So I'll start with lesson number 1, and that's, you got to do your homework on the launch pads. Paul was just sitting here telling us how he did due diligence. He's out there looking at launchpad after launchpad after launchpad, and he found some red flags. So, the big point there, read the contracts, look for red flags, and, look for that history of failed launches like Paul was talking about. If you've got, just as he just said, if you've got launch after launch after launch that, is dying within 48 hours, I think there's a major red flag there to be concerned about.
All right, guys, lesson 2, obviously watch out for refund clauses that kind of seem innocent, but kind of, will eventually drain your entire project. But also, guys, look to tools like Grok, look to Super Grok, look to ChatGPT, and take that, upload the document and say, hey, make this understandable, make it easy for me to understand, and tell me, are there any risks? Is there risk profiles? All right. And compare it against other things. So, that's what I do now. It's like these white papers are forever and so technical. And I'm like, okay, throw it into Grok. Give me a short summary. I start to understand it. I start to learn it. Then I start to ask it questions. And then once I understand it in my brain, then I go and share it with other people. And I see if I can, understand that whole lingo a lot better. But obviously, you got super tools now, to help you. So make sure you're looking for those red flags and looking for those clauses.
Can I add to that?
Yeah.
On the refund thing, most launch pads, even legit ones, will have a refund period these days. So it's not that as an isolated red flag. Mainly because it's what their users are demanding. Because, like I said, most Launchpad participants, they want to be able to sell they want to sell profits, their initial allocation, 25%, whatever, at a 4x, because that takes away all their risk. They get their initial capital back. But they demand the right to refund in case price drops below, then they don't have to lose their capital, right? So it's basically a risk-free investment for them to either, So they will have that, but it's what you need to look at is the 48-hour period refund, and then the performance relative to that 48-hour window with these launch pads with a high frequency of different projects, right? Because these IDO participants, they're not claiming their tokens, forgoing their refund, and then dumping the tokens below the price they bought it at, right?
Right.
So when that combination of events happens, then it's a flag.
Absolutely.
Very big one.
So, Paul, do you have another lesson for us?
Yeah, sure. In regards to that, don't give away marketing KOL tokens without total verifications. Like, you should be speaking directly with the KOLs, and then you should do your DD on them individually. Look at all the tokens they've promoted, how well the tokens performed afterwards. There's also there's tools now. Protocols is a really good tool. It's protocols spelled with a K.
Okay.
We've actually worked with the team, and their analytics on KOLs is actually pretty refreshing. It's a really good snapshot of how well those KOLs perform and how sticky their audience is. You'll be quite impressed with like the sheer magnitude of bots following these KOLs. Also, with the KOLs, guys, watch out, because we've done the DD on them, and I mean, I have a database of hundreds now, hundreds and hundreds, maybe even 1,000. And it's because most of big KOLs will set up a range of other bot accounts that are also KOLs, and then they all retweet, reply to each other, like each other. So they get more and more engagement within their little community. But if you look at them, individually and go through each of their data, you'll see that they're all mostly bots, and they're all created by the same, not just KOLs, but a lot of the Launchpads. So look at all these dodgy KOLs associated with these Launchpads, and it's like this very incestual marketing scam.
We might have to go for a part 3.
Yeah, right. That's just you're opening our eyes to a lot of shady shit out there.
And next week, dodgy KOLs. Dan's going crypto exposing KOLs.
How are we not taking advantage of this stuff? All we do is just ask our buddies to give us a like and maybe subscribe.
and they know we dodgy.
Yeah, exactly.
Out there. It's so bad. If you go for this, you kind of have to pity founders. You know, it's not just investors getting owned, but like legitimate founders that love their product, believe in it, and then they have no idea what kind of trap they're walking into. Right. Because they're just getting owned from the Launchpads, the exchanges. We don't need to get into that one. The KOLs, like, it's just tough out there, man.
Oh, it's absolutely crazy. All right. So how about lesson number 4 here? And that would be to build tokenomics that tie directly to utility and revenue. You know, without that, your project's just speculation. It's not going to survive. So, you know, Paul's been talking about that a bunch here. We've been reiterating it over and over again. If you're building your project and you don't have real world revenue or some sort of real revenue, I think you need to rethink your project a little bit.
Absolutely. Yeah, this is going to be one of the biggest trends, like I said, with the stablecoin thing, where once there's enough liquidity in stablecoins and businesses start accepting stablecoins, they're one step away from launching their equity in some form, in a tokenized fashion, right? All these businesses will have their mini IPO. But honestly, I think if you removed SEC from the equation, every single token since the ICO season in 2017 would be an equity or a network token that is a reflection of the performance of that network's productivity, right? How well it does commercially should be a direct correlation with how well the token performs, because it should be like a revenue share or some kind of form of equity. Once we get to that phase, this is when crypto tokenizing everything goes nuts, and it's the way everyone should be designing it. But there's ways to design. Oh man, sorry, I'm going to go off on a tangent again. I don't want to fuck up too much time.
Go for it.
But this should be a conversation you guys bring on people way smarter than me, because tokens should be a form of security. It's just we should get rid of the archaic security laws, because it's really, really simple. We have public disclosures. We don't need 30 parties to protect us from being able to do the research we can do on-chain ourselves. As long as revenues of all these projects are on-chain, we can see exactly the health of that business, just like we do in DeFi protocols, right? You can see how much revenue they're making, how much TVL they have, how distributed the wallets are, how legit those wallets are that are providing liquidity to that DeFi protocol. And there we can make a simple like P&E ratio valuation on that project and decide if the tokens are worth it. That's all there. And that's exactly how all tokens should be. If we do that, then we directly embed accountability on each token launch, because the founders are now responsible for creating a productive business that generates revenues, because that's what people are buying into when they buy the token. If you remove that specific clause with tokens, then you remove all accountability, which is why we're seeing all this stupid mess in the crypto space, because people are saying utility token, you get to use this token in our network. It's just so stupid. No, right? So yeah, I think that's a really important one. You guys should get into like security network tokens or something, because that's the way this whole industry goes big, like real big. And that's where all revenues from the world get consumed by crypto, right? It's all on chain. Everyone can view it. And then every single business in the world, like you got a little cafe, you're doing well, you want to raise a little bit of funds, you just issue a token relative to the performance of your cafe. It's not DeFi. It's not like, you know, the Satoshi's dream, but it is inevitable. Because it's so easy to do. It's the best fundraising system in the world. It's the best equity management product in the world. I mean, tokens. So easy.
And because it's transparent and no one's crooking the books, if you run it legitly, who wouldn't want to put money into a potential gold mine? You know, and that's one of the biggest things. I've got a friend
it's a bearer asset.
Yeah, bear asset as well. And I've got a friend that's like, he's like, okay, when you start to make good money, like what do you invest in? Where's your return on investment? How do you, so now this is actually, I think you're onto something. Thank you for that topic. We'll definitely cover it.
Yeah, absolutely.
All right, guys. And point number 5, time to market. A great product launch in the wrong cycle can still fail. So at this current moment in time, if a close friend, and you see him, warm up that palm of your hand and smack him. Say, if I hear win anything, W-E-N, win Lambo, tell him just to take a chill pill, smack him back down to size. No, but seriously, guys, it's like, it's stupid to launch in this crazy market. You heard the stats. 5 out of 50 projects, less than 70% of the IDO price. It's stupid. If you're happy to be a sadomasochist, is that the right word? Sadomasochist.
Sadomasochist. Yeah.
Yeah, sadomasochist. That's it. With the little red ball in the mouth. No. If you enjoy that type of stuff, I understand, but I don't. I want to make money. All right. So time to market is very, very important.
Absolutely.
All right, Paul.
And it's coming. That time's coming, guys.
Absolutely.
Red Bull or no? Joking.
Oh no! Oh, God, no!
No.
No.
I'm not going to be Marcellus Wallace in Pulp Fiction.
From surfboards to Red Bulls. All right. So, Paul, what would you add to the list? What's one lesson you would just like to shout out from the rooftops?
Yeah, sure. So, look, speculate away for sure, but listen, you should be able to ask every single project in the space, first and foremost, is where do you generate your revenues or yield from, and how does being a token holder capture that value? I mean, if you just ask that simple question, 99% of all projects are going to sit there stuttering because they can't really answer that properly. And that's a really clear signal, right, for some kind of success. Easy.
Absolutely.
All right, guys, to everybody listening, if you're a founder, a gamer, or a community member wondering why projects fall apart and others survive, this is a truth that you need, like we spoke about today. Drop your thoughts in the comments and don't forget to share with someone building in the crypto space right now.
And don't forget to subscribe, smash that like button, and check out BIGA Arcade's progress. Paul, thanks again for coming out on and being so brutally honest here with our audience. And it's been a lot of fun.
Yeah, thanks, guys. It's always fun. I can't wait to come back again, seriously. You guys are legends. Look forward to our next catch-up for sure.
Absolutely.
Awesome. Paul, take care, and we'll chat to you soon.
Sounds good.
Thanks, Paul. Take care.
See you guys.
Bye.
The material and information presented in this recording are for entertainment purposes only. Do not misconstrue what you hear as investment or trading advice. Always do your own research. The views, thoughts, and opinions expressed by the guests on this recording are their own and do not necessarily reflect those of Dad's Gone Crypto or its hosts.